Welcome back. You're watching What the World Wants, and in a run-up to the Union budget, the maiden Modi budget. We spoke to Jim O'Neill earlier, and now joining us is Tim Dickson from Invesco Perpetual. Tim, hi, good to have you on the show. First question, how are you approaching the markets in the run-up to the budget?
Yeah, I mean, we're obviously, we're quite optimistic. We think the elections the result was better than we would have expected. And clearly with the majority in the lower house, we think there's a real mandate for reform. So, yeah, we're optimistic. Clearly the market has moved quite a bit, but we still don't see the market as being overvalued at these levels.
All right, but for the Indian markets, there has been a significant outperformance in the first half of this year with 20% dollar term gains. Do you think there's a case being built for taking money out of India and putting it in a market like, say, China? Or would you believe that India could still be the best performing equity market for the rest of the year?
Yeah, I mean, some of the easy gains have been made, and there's reasons to think that investing in China might be attractive as well. I don't think it's an either-or. From our perspective, although we may be cutting some of the investments, it's likely that they'll be recycled into other things within India. So we remain optimistic. Because, as I just said, we don't. Although the market has obviously re-rated quite a bit, that was from quite a sort of oversold, on the cheaper side of things, valuation. So we don't see, for the market as a whole, huge amounts of overvaluation as yet. So we'd remain reasonably optimistic on the market.
Tim, hi, thanks for joining us. Well, as someone who's watched the Indian markets for a long time now, what are the key expectations from this maiden Modi budget?
Well, I mean, I suppose we can't get too carried away and get very excited about what happens in the very first budget, in the first sort of major move in a 5-year parliament. But clearly, we'll be looking for some moves down the pro-reform agenda. I mean, difficult to get into specifics, but things that broaden the tax base, things that improve investment into infrastructure, things that lead to the deregulation of oil, fuel prices, etc. All of these things are areas that we'll be hoping to see improvement on. But, we understand as investors in India that none of this is overnight, that it will all take time, but hopefully the first signs that we're going in the right direction will be seen in the budget.
All right. In the funds that you manage, in fact, energy has just about an 11.5% weightage. Now that there is an expectation of more reforms to come through in this sector, would you increase your allocation in oil and gas?
Well, I think if we were absolutely certain that we were going to see reform of energy prices, then yes, I think there's real opportunities there. I mean, clearly we had the disappointing news that the rise in prices for certain fuels has been delayed again on the gas front. I mean, we would hope that that is only a delay and that we will see the deregulation of that, because it's costing a lot of money and it's obviously undermining the returns that the firms can make. But yes, we are broadly optimistic that we will see reforms of energy prices.
Okay, let's talk about some other sectors, because we have recently seen a revival in the Chinese data, both in the PMI data and a couple of other data points. And there is a bit of a sense that metal prices could move higher if Chinese demand picks up. Would that be your view? And what would your take be on the Indian metal sector?
We're not massively optimistic on commodity prices. I think the Chinese economy, yes, the PMI is ticking higher, but we don't expect the next stage of growth in China to be anything like as commodity intensive as the last sort of 10 years have been. Meanwhile, developed world growth we still think remains muted. There is growth, but it's not particularly strong. So I think when you take all that together, we wouldn't expect commodity prices to rise significantly.
So in effect, would you increase your exposure to the Indian market, or would you wait to see what the budget brings about and then take a call?
I'd say we're pretty happy with the weighting where it is. I mean, it's obviously been a very positive thing this year. We have seen a big re-rating. I think the next moves up in the Indian market will probably come over time as we see some of these reforms coming through and as we see a revival in the economy. But none of that is likely to be very short term. So I think it's likely we'll be around the weighting we are. Maybe we'll be moving the money within India a little bit, but I wouldn't expect us to be sort of materially adding to it.
Well, just to follow that up then, Tim, within sectors, where would you move money into and where would you move money out of, keeping the budget expectations in mind?
Well, I think some of the sectors are getting a bit probably overexcited. I certainly think some of the consumer sector still looks expensive. I guess we'd be looking to maybe move some money into sort of infrastructure, capital, the capital goods sectors where we haven't had a lot of exposure. I think IT, which has obviously been a laggard, is probably worth a look. Maybe one or two things in cement sector. I'm not broadly positive on the cement sector, but there's perhaps one or two opportunities there. So maybe taking a bit of profit on some of the stuff that's run very hard and recycling into some of the stuff that's missed out on the full extent of the rally.
Okay, fair enough. What about the banking sector? I mean, your sector weightage is more than 30% to financials. So would you increase that? And if yes, what would your preference be between private and PSU?
We're pretty well exposed to the banks in India, actually. We've got one or two that we like. They're private sector. We remain nervous of the public sector banks because we think they're undercapitalised. Clearly, they've been through a pretty bad asset cycle. That's not quite over as yet. So we very much remain on the high-quality private sector banks. We're happy with our exposure where it is. I wouldn't expect us to cut it back, that said. But I think given the strong run we've had, we wouldn't be looking to add.
All right, for the next 12 months then, what's your view on India? I mean, will putting in a substantial rally in the first half, we've already done that. Do you think the rally is already behind us? Or is this just the start of what could be a multi-year bull market for India?
Well, we like to look long term, and when I talk long term, I mean 3 years or so. I mean, I think if you're looking long term over the next 3 years, we're probably quite early into what could be a substantial run in the market. Now, of course, I could be wrong. I'd be wrong, I think, if the reform agenda fails to meet expectations. I mean, clearly after the prior elections, we had a big move up in the Indian market after that result, and ultimately those expectations were disappointed. I see nothing to make me think that this time they will be disappointed. But if things pan out as we expect, with steady reform and some of these items going in the right direction, I think we're probably quite early into what could be a substantial bull market. In terms of the next year, always more difficult to pick what's going to happen to markets in the short term. I think we will need to see a pretty nice, positive, steady run of announcements and actual practical policy measures to really see the markets run up much in the next year. But certainly beyond that, I'm pretty optimistic.
Let's get back to the budget expectations, Tim, because this time there's a belief that there will not be any populist measure and it will be a very tight budget because the government will want to resurrect the fiscal consolidation. So do we get some of these harsh measures? Do you think the market could correct in the near term, or will it take it in its stride and actually take it positively?
It's always very difficult to predict what a market will do in the short term because sometimes one day a market will react in a totally different way to the same news as it would react another day. My own feeling is that investors are looking for reform and hard measures, and therefore if we get reform and hard measures, I actually think the market will go up. I think if we get lots of populist measures and we don't get moves on things like fuel subsidies, I think ultimately that's quite negative news, because if this government's really going to make a move on reform, now's the time to do it. It's just got the mandate. It doesn't have to worry about certainly national elections for many years. So now's the time to do it. So we've been looking for some good momentum in terms of reform announcements. So I think things that even, if they appear harsh and hard, that's probably what investors need, because ultimately that's what the Indian economy needs in the medium term.
All right, let's talk about some stocks now, Tim. You have NTPC among the top 10 stocks in your portfolio. Is the power space a sector that you are betting on, and do you see a lot more upside considering that there are reforms expected in the budget?
Well, I'll talk generally rather than specifically about stocks, if that's all right. In terms of the power sector, clearly that's a sector where we'd like to see some reform. I think there's a lot of potential for better fuel availability and for freeing up that sector. India's short of power, we know that. The state electricity boards are in a bad way. So yes, that's very much the sort of sectors where we expect to see reform. That said, on the individual stock that you've mentioned, it's obviously had a pretty good run. It's got a new tariff system coming in, which I think is going to be quite harsh. So perhaps the upside from here might be quite limited. But for the sector as a whole, it's really in the forefront of the sort of areas where we need to see reform.
All right, that's enough talk about the budget. But thanks so much, Tim, for joining us and giving us your view. In fact, we thank both Tim and Jim for giving us their views on what the world wants. The hopes are high on this being a budget that will bring about a lot of fiscal prudence, and there won't be mindless populism. But we'll have to wait for just about a week to find out. Thanks for watching.